Hi, hello everyone. I hope you're doing well. Today, after 1 week, we are here with each other again to talk about the market, our favorite assets, and to see what is going to happen this week and in the following weeks. Last week, we talked about the EURUSD, oil, Dow Jones, and gold, like before. Uh, Today I'm going to talk about the results of our previous analysis on these assets, and then we'll talk about our uh, predictions regarding the markets on all these four instruments. Last week, let's start with your USD. Last week, my prediction on your USD was a bearish move. It's the 4-hour chart. Let me zoom in. And yeah, last week we were here. So in the previous week, we didn't have any conversation with each other. So we are going to talk about 2 weeks ago. We were in a bull channel, and the channel was something like that. And my prediction was a bearish move um, because you can see the climatic move of the price, and then as you see, the price dropped, and we are around the 50% pullback of the whole bullish move on the 4-hour chart. So let's talk about your USD in precise. Say if we consider this area the first uh, move of the swing, the swing up, and here the last price that the traders traded, you can see the price is in the middle of the way. So here is the 50% 50% pullback of the whole move. Here there are some scenarios. I'm bullish now. I'm waiting for the price for the bulls to see some strength so that I'll be more confident to take a long position. Let's talk about the price more precisely. Here the price is in a very tight channel, and after a very sharp pullback to the moving average, it is the EMA 20 moving average. After the pullback to the moving average, you can see the rejection. The bears sold the pullback, and we have had another leg down. But this move is so meaningful. It shows that the bulls are strong, and once the price went back after this leg up, once the price went back to the area again, you can see the attempts of the bulls to buy this low. And now the price is in a tight trading range. Where is the trading range? Here it is. To me, the bulls are gonna buy again for another leg up, and the leg up will be to this moving average again. So let me change the color so that you can see it better. Here it goes. See? The whole move is bearish. It's in a very tight channel, but the price is in a trading range, in a tight trading range right now. Why a trading range is here? Because this low here is so meaningful for the bulls. And now, once the price went back to this low, the bulls started buying, and the bears started selling, and then buying, and then selling, and now you can see the bulls are buying again. You can see that the bears are not confident to sell again, to sell low. Buyers are more strong, much more confident in this area. So what is my prediction? My prediction is the bulls are gonna succeed to take the price to the moving average again. I don't know if the bulls will be able to break the moving average and another leg up, something like this, or the bears are gonna take the price for another leg down. But I'm very confident that every low will be bought. There are bulls at every low. So once the bears take the price lower, there will be buyers to buy. And ultimately, we can witness the price to see higher prices. So this is my first prediction for the EURUSD. It might be from this area or a little bit lower, but since the price is around the 50% of the whole pullback, the bulls are gonna take the price higher at least for 10 bars or 2 legs. And on the lower time frames, you can find more precise areas to buy. Here on the 1 hour chart, as you see, the price is in a very tight channel, very tight. Is it rational to buy here immediately? I don't think so, unless your stop loss order is way down here or even lower, because the sellers are still confident that the price is going lower, so they agree that the price is still too high, so they're selling low. Once the bears are selling low, it means that the price is too expensive still. But it doesn't mean that they're gonna sell for eternity. No. After this move, we are going to witness a trading range behavior once the trend line, the channel line, is broken upwards. So we need to wait for the bulls to break the trend line up, and then we can wait for a pullback. So the price action could be something like this. So a break from this area, and then a pullback, and then another leg up to the top of the bear channel. So it is my expectation for the price on the 1 hour chart. So it's better to wait for the bulls to show some strength before buying. But aggressive bulls never wait because they're confident that there is a low here, maybe here, maybe here, maybe a little bit lower. They're so confident that the price is not gonna break the channel downwards. That's why I have put my stop. If I want to buy here, my stop would be somewhere around here, because I'm confident that the price is not gonna go lower than the channel, the low of the channel. So I expect the price, if the price goes here, I expect the price to uh, bounce from this area, somewhere from here or a little bit lower to uh, the top of the channel. Therefore, if you want to buy here, it's better for you to put your stop loss order way lower than the current price. Okay, what about the people who trade on lower time frames, such as the 5-minute chart? It is the price movement for today. So it is the beginning of the day, and as you see, the price is in a bear channel, but you can see a lot of stairs. See, from the beginning of the day, you can see a trading range price action behavior, and then the trading range broke downside, and then a pullback to the bottom of the trading range, and then again it dropped, and then another pullback, but this one has gone deeper, and then again another drop for another leg down, but there were bulls down here. See, once the price got closer to this low, there were bulls to buy, and here you can see a lot of bullish behavior. See, the price broke downside from the channel, the bear channel, but it went up. Then another small leg down, and it went up. And you can see a double top here again. And bears started selling from the double top. It worked. First leg, pullback, second leg, pullback, third leg, or simply first leg pullback, second leg. And then as soon as the price got closer to the major low, the bulls started to buy. It shows that the bears are not confident and the bulls are buying at every new low. This is the message the price is giving us. For now, I am waiting for the New York session to open to see what's going to happen. Once the New York session opens, there are two scenarios. We might see a sharp drop to down, because as you see, you can, let me show you something. What do you see? A triangle, a descending triangle. What does it say? It says that if I break downwards, there is 50% chance for another leg down or a measured move price action, meaning the price is gonna drop based on the height of this move. So you can expect the price to go here, and then since it's a wide bear channel, the bulls will buy from the bottom of the channel. So there are bulls down here. Let me show you something. The whole move. It is the whole move. See? Leg up, leg down, leg up, leg down, leg up. It is possible for the bulls to take the price to the top of the channel, and then again the bears start selling. See, this area is so important for the bears, so they will start selling from the top of the bear channel to make another lower low, and the bulls will buy from the low to the top of the bear channel. And this scenario can be right for 60%. So the higher probability is in favor of both bears and bulls if they trade in the sell zones and the buy zones. For the other traders who are trading in the middle of the channel, the risk is higher because their stop loss orders are far from their entries. So if a bull wants to buy right now, the stop must be down here or even lower because they're gonna take the price down to make another lower low. So the stop loss order might be somewhere around here. And for the bears, I guess the stop loss order must be somewhere around here because there is an area for the bears to put their stop loss orders because they believe that the bulls are not gonna take the price to make another higher high. Do you understand? So it is the whole scenario for the EURUSD. Let's take a look at oil. For oil, my prediction was trading range price action. So I expected the bulls and bears to buy low and sell high. And 2 weeks ago, once the price was here, it was the high of the, let me change the, okay, let me change the color, okay, and it is the low of the trading range. So, and let me zoom in. Two weeks ago, it was the top of the trading range, and this area was the bottom of the trading range, and you can see the bullish move. So here it is transparent. I mean, the bullish move is so transparent, so you can easily see the uptrend. But here the trading range behavior is more vivid. And I told you that the bulls and the bears are gonna scalp and take profit, take small profits because they're not confident, and that's why a trading range occurs and is formed. And here, this way, you can see that I was right, thankfully. And here, at the bottom of the trading range, once the price is at the bottom of the trading range, the bulls started buying and they scalped. And here you can see taking profit reactions here, and another small second leg up. And then the bears started selling at the top of the trading range. See, they sold, and then they sold here, they sold here. They tried to make the price to go lower to make a breakout, but since it's a trading range, after saying some uh, insecure movements, they had lost their confidence in lower prices, and then they started to exit their short positions, and both bulls and bears started buying. The bears started buying their short positions, and the bulls started buying to take long positions. And you can see the bounce from this area, and you can see that the price didn't make another lower low. It's low, but it's high, it's a high, it's a high, and then the price is somewhere around the top of the uh, trading range. So since this move is so strong, I believe that we are going to witness another second leg up, even a small one. Uh, as you see, the price action in trading range is usually uh, two-legged moves. See, first leg, pullback, second leg. And here, first leg, small pullback, second leg. Here, first leg, pullback, small second leg, although it didn't go lower than this low, but it's a small leg down. And here, as you see, this is the first leg. I cannot consider this one, this little move as the first leg because of the height of the whole trading range. And here the trading range can be like this. So if I want to adjust my trading range, and now this is my trading range right now. So look at the height of the trading range. This cannot be the first leg. So here it is the first leg, and then another leg up is my expectation to occur. And maybe since the whole move is bullish, see, although it's a bearish move, I can see that the bears hasn't had uh, confidence to take the price lower. Here, it was before the new year, yeah, on 16th of December, and now today it's the 9th of January, so it'll be something around 3 weeks. Yeah, it's gonna be a month that they couldn't take the price lower to make another lower low. And I believe that the bulls are more confident to take the price higher to this high. This is my prediction for the following weeks, not only for the next week. So to me, at least uh, another leg up is expected. I don't know, maybe the bears are gonna sell again from the top of the trading range to take the price to the low of the trading range, but ultimately the price will the trading range will be broken, and the price will go above this high or below this low. But since it's a trading range, there is 50% chance for both parties to win. So we need to wait to see what they're gonna do. And for the people who trade on lower time frames, I want to take a look at the price on the 15-minute chart. Yesterday, we witnessed a very strong bullish move, and now the price is in a bear channel. You know, the channels are not drawn. The channels are not drawn in what way? So you should have many lines on the chart, not many, as many as possible to uh, to see what line is working better. And if you see, for example, one line is not working, you can eliminate that line. For example, let me show you something. Imagine the price is here. Okay, I have this high and this high and this low. So I don't know where the price is going. So I connect this top to this top, and then I just clone the line and put it under the low of this move. Imagine I don't have this leg, and you can see the line worked. So this is a precise line. This line worked, and as you see, the price went higher. And now we need to wait for the bulls to see if they can succeed to take the price to the top of the to the top of the bear channel. And if we are going to witness another leg up, first leg, pull back, second leg from here, or the bears are gonna succeed because on the higher time frame, the price is at the top of the trading range. But to me, since I told you, this leg up is so strong for the bulls to be confident to take the price higher for another leg up. I believe the bulls are gonna succeed before the bears succeed to take the price lower. Let's take a look at Dow Jones. For Dow Jones, I was bullish 2 weeks ago, and I predicted that this top will be met by the bulls, and it happened. It is 2 weeks ago, and the price was here, and we had a leg down and then a leg up. And as you see, the bears couldn't succeed to make a new low. See, this low is higher than this low, so it's a bull channel. Price is in a channel, even if you cannot see the channel. Remember that. See, this is the channel. The spike, trading range, another spike, and here I consider this low as the first leg in the channel. You can consider this one, but based on this price action, I consider this one. And some people can consider this one, but this one is stronger because it has more bars in the leg. So the first point, the second point, we connected to each other, and you can see the line is valid, and it's a flag. The flag broke upwards, and then second leg, but the leg didn't go above this high. Another leg down, and the bottom of the channel worked. They held, and another leg up, and you can see this strong bar and a very strong pin bar, although it's bearish, but it's a very strong signal bar for the bulls to enter the position. Some people waited for the second bar, which is the Q bar, to take the position. Many took the long position here, and then a very strong leg up, small pullback, another strong leg up, and then a pullback and another strong leg up. But this one, this leg went below this leg. It means that the bulls are not that strong anymore. The bears could take the price lower, but this leg is not that strong to be considered a major leg. So the major leg for the bulls is this one. You can put the line below this low. I wouldn't do that. You can put the low below this one. Maybe, yeah, that's reasonable. And some people will let the line be below this low because it is the move, it is the line that supported the bullish move. So you can let the lines, both of them, be on your chart to see what the price is going to do once it is getting closer to the lines. And the top of the channel is either here or here. Both are reasonable. As you see, the lower one worked. See, if I eliminate these two lines, see the first move, the first leg up, and the final leg up. I connected these two lines, these two areas to make a line, and then I cloned the line and put it above the area that the whole move is covered, see, and you can see the line worked, and bears sold, and some of them exited their positions because it's a bullish move, bullish trend, so they scalped out their positions, and bulls bought. And I believe that since you can see the gap between the close of this candle and the moving average, so there is a gap here, the empty place here, and it shows that the bears were strong enough to hold the price below the moving average, and it shows that there are confident bears above this high. So yeah, I believe even if the bulls take the price higher, there'll be sellers above. And if you want to adjust the channel and put the channel the top of the um, strong bearish bar, you can see that there'll be bears at the top of the channel, either here or at the top of the bear leg. So we'll see. We should wait and see what the bulls and bears are gonna do. I believe we can witness another leg up before a leg down, but ultimately the bears will succeed. In my opinion, the bears will succeed to take the price lower, maybe to the bottom of the channel, or 50% pullback. I don't know. We should wait to see. And for the people who trade on lower time frames, you can see a very strong leg up and then a tight trading range. It is a triangle, and I would buy if I saw a strong move from the bulls. But since there are many bars in a tight trading range, uh, I do not consider this leg up as a strong as it used to be when the price was here. And you can see a moving average gap here, another one here. So it shows that the bears were strong at times, but we should wait for the bulls to see what they're gonna do. Uh, the price is in favor of bulls, so chances are we're gonna witness another leg up, but we need to wait for more confirmations. And finally, my favorite asset, gold. For gold, for gold, my prediction was another leg up. See, that was the channel I drew 2 weeks ago. Yeah, the price was somewhere around here. And I drew the channel, the trend line, like this. Yeah, the first leg up, the second point, and I expanded the trend line, and I put the cloned line at the top of the bear leg in the middle of the whole move, and I put another line at the top of the uh, strongest leg down after this leg up. And my prediction was, I had two scenarios 2 weeks ago. If you go back and see my previous live, I told you that I believe that the bulls are gonna take the price a little bit higher, and then we will witness a drop. But since it was Friday, yeah, the price was somewhere around here. Since it was Friday and the market closed here, on Monday, the bears sold, and we witnessed a very strong bearish move. Yeah, the price didn't go higher to the top of the channel, bull channel, and it dropped immediately on Monday. But as you see, the bottom of the channel worked. The bottom of the channel worked, and they stopped the bears. And as you see, there is another little leg down. First leg, pull back, second leg, and then bulls started to buy. First leg, pull back, second leg, and then pull back, and here we go. We are in a bull channel, but this bull channel can be a bear flag, meaning for 60%, this move will drop to the bottom of the bull leg, and it will create a wide trading range. But I'm not saying that it's gonna drop from here. Maybe from here, or immediately from here. This is my first prediction. Look at the price action. Look at the strength of bulls. They are not confident. See? Two bull bars, bear bars, bull bars, bear bars, bull bars, a bear bar, and then dojis. Look at the dojis. Dojis. They're not confident. Bull bars, bear bars, dojis. Bear bars, dojis. Bull bars, dojis. What does it mean? It means that the bears are not confident, the bulls are not confident either, and they're scalping. So it's a trading range price action. And for me, if the bulls take the price to this top, there will be bears to sell. Maybe they're not gonna take the price way lower. Maybe there'll be a huge bar, a huge bull bar, something like this, and then the price stabilizes above this top, and then we see something like this. Okay, so it might be like this. If we witness a huge bull bar at the top of the trading range, because it's a leg in a trading range. It's a bull leg in a trading range. A bull swing in a trading range. If the bulls succeed to create a strong bar above the top of the trading range, above the top of this strong bear leg, and if we see a pullback to the top and then another candle, it can be a smaller one or a bigger one, it doesn't matter that much. We can expect the price to go higher. Otherwise, if we see a rejection after the breakout, meaning if we see a bearish candle after this bull bar, we can expect the sellers to take the price lower to the bottom of this channel, maybe, or to the bottom of the trading range. So to me, we are in a trading range already. Some might say it's a bull leg. Yes, it is a bull leg, but based on the behavior of the price in this area, we are in a trading range. That's why the bulls and the bears are not confident to hold on their positions. And let's see what the price is doing on lower time frames. Yes. You can see the gap up above the moving average. Very strong. When I'm talking about confidence, I mean something like this. Look at the bars, bull bars, very strong one, another one closing at its high, but you can see the rejection, dojis, see the confidence is not as strong as it was when the price was here. So spike, channel. The channel got wider. Here, the channel. See, it worked. Then the channel. The price went down to the bottom of the channel. The channel held the price. And here you can see the bear channel, which is a bull flag, meaning for 70%, the channel, the bear channel will be broken from the top side, and vice versa. When we are in a bull channel, for 70%, the channel will be broken from the downside. Okay? Therefore, as you see, a very strong move. The bulls could take the price to above of the moving average and to above of the trend line, and you can see the measured move up. This is the measured move up. See? The bears started selling when the price was close to the measured move up, and now it's in a triangle. Has it reached to the measured move up? First leg, pullback, second leg, but this leg is smaller than this one, so the bulls expect the price to go higher. For those bulls who haven't taken out their profits, they're waiting for the price to go higher to this level or even to this level to make more money. And some of the bulls took out their profits because it's in a tight trading range, tight triangle. So it's a tight trading range. It is called dead money. The price doesn't go anywhere. The bulls and bears are not confident, so they're scalping. Some of the bulls took out their profits and are waiting for the price for the big bulls to show some strength, and then they will buy if the price goes here. So the bulls will buy if the price goes here. Some of them started buying from the bottom of the channel. The others are waiting for the price to go here, and the bears are waiting for the price to break downside. Yes, and for both of them, there is only 50% chance to succeed. So for 50%, the price will break downside and continues to drop, and for 50%, the price will go upwards and will continue to go higher. Okay, then 20 minutes ago, 18 minutes ago, the New York session opened. We are on the 5-minute chart right now on gold, and in a triangle. We were in a triangle, and as you see, both bulls and bears tried to break the triangle, but both of them failed. The bulls failed and the bears failed, and now we are in a bigger triangle, let's say, or simply in a trading range. See, it's a trading range. Why I did mention this low, why I did choose this low, because it was the beginning of the trading range, and it was the beginning of the trading range from the bulls and for the bears, and you can see the price reacted to these areas, and you can see this major high is lower than this major this major low is higher than this major low, and you see that the bulls have been stronger. Yeah, they didn't let the bears to go below this low, which is a major low for the bulls, but for bears, they failed to uh, protect their territories against the bulls. The bulls could take the price higher than the high of the trading range that lasted for more than 100 bars, 120 bars, meaning the bulls are stronger, and you can see the uh, strong bull bar. Many bulls buy here to take long, and bears are selling their positions. They're buying their positions to exit uh, their shorts, and the price is going to go to the top of the trading range. And if I was buying, I would take I would hold on my position until the price reaches this level. I would take out my profits at this high, not this one, because I believe it's a very good place to take your profit. And also, this triangle is becoming an expanding triangle. Yes, not very precise, not very uh, perfect, but mm, we can consider this one an expanded triangle if the price goes to this top and then drops to make another lower low. So it'll be an expanding triangle. Uh, you can consider this one an expanding triangle, but you should wait for the price to see what it's gonna do. For me, the price is in a trading range, so you should scalp. You cannot hold on your position. Uh, but for the people who are ready to put more dollars at risk, to put their stop orders down here, they can wait for the price to see if the price is going to succeed to break the trading range and make a new high. But I'm sure that there'll be a lot of bears selling at this top and a lot of bulls who will take out their profits at this high. So in the next week, we can uh, get back to uh, get back to this level to see what the bulls and bears did. Okay, thank you for your attention. I hope you have found this session useful. Please tell me what other assets or what other aspects you want me to talk about in my live sessions. And bye for now. Thank you.